Well, good morning, everyone. Welcome to our Tuesday morning trading session. Hang on just a moment here while I get the screen sharing going on. So the markets have just opened up. And it looks like we've got a little bit of or had a little bit of an opening gap. Didn't seem to last very long. Just a moment here. I deleted my crude oil chart by mistake. There we go. Okay. Okay. Sorry about that. Had a little technical difficulties there. I hope everybody can see my screen now and can hear me. Can I just get an audio check really quick? The webinar software crashed on me. Okay, great, thank you. Stupid thing. Okay, I think it's all working properly now. All right. Okay, we've got the markets just opened. And a pretty good, strong open, which I guess is more or less a continuation of what we saw yesterday in the marketplace. We're going, no, here, let's take a look at the Eagle. Gives us a better view of what's going on. So the market in a little bit of a rally yesterday, prices coming down through the overnight, not too terribly active. This could well be a test of the extreme. in which case if it fails and heads lower, either the market will continue sideways, with this being the bottom end of the trading range, around 47.80, or we may get a full-on reversal and actually see the market trade a little lower today. Still a little early. We'll try to give them here a few minutes to settle in, especially during these summer periods. We did get a solid first micro-macro cross here on the Hawk scalper. Good morning, Jim. Jim says, here's your advanced decline numbers, 1540 on the buy, 1040 on the sell. So that would probably be the result of this little spike that we saw early out of the gate. To be topping a little bit of difficulty getting above this 47.98 area. So that may turn out to be a rather large retest of the high. We'll see how that plays out here in a couple of minutes. All right, so here come the sellers now. Ooh, pretty quick move lower. Leaving us with a not very desirable looking macro pullback signal. Why not desirable, you ask? Well, if this is the top end of the trading range, I suppose we have enough to scalp out. I don't know if I would choose to go in for the full amount, maybe test the waters a little bit. All right, maybe I don't even need to give it that much. Maybe I'll risk it just here below 47.90. I know, usually I tell you to leave a wider stop, but I have a feeling if it fails here at 47.90, we may see it try to retrace to the lows. So not one of those signals that gives you a warm fuzzy feeling, because here we are. We've got this sideways trading range, or maybe a sideways trading range. And if the signal fails, we could see it trade right back down here to where the morning began, around the 47.85, 86 area. No, here they come. All right. Well, not a real surprise there. Going to get a red bar buy signal, which we may choose to short. Depends how deep it drifts here. But that wasn't too expensive of a lesson to try to get a feel for the marketplace. Oh, way to go, Tony. I think Tony makes a very interesting comment here, and I'll get to it as I highlight this red bar buy failure. Tony mentions, he says that for about the last 3 weeks, the first good signal of the day has put me in the black. Got that first micro macro cross signal today as well. And I think that's typical of the summer months. I really do. I think, traders get busy early. There's not a lot of whipsaw type signals out of the open, which is what we see the rest of the year. Sometimes you get a false breakout. There's usually a fairly pronounced move out of the open. The problem trading the summer months is the sideways nature of the market. We see a lot of sideways activity. Even here, again, focusing on this potential trading range, I'm looking to short about in the middle of the range. Well, excuse me. If the market is in fact in a trading range, we're going to have buyers try to buy the market down here. We're going to have sellers try to sell the market up here, which makes the middle very, very neutral. So now we're getting something that looks maybe a little bit more like a retest, because we still haven't seen our test of the extreme, and we're producing a green bar sell. Oh, good, it's into yellow bars. I can ignore it entirely. Jim says there's quite the 15-minute candle, I bet, given that first rally that we saw. So the market opening down here, big rally up, kind of resetting a little bit and then finishing somewhere near the high. I bet it looks something like that with a body like this. All right, might be getting a trend change signal / late filter entry. Soybeans kind of quiet here this morning. Not a whole lot going on in the soybean market. Talk about your sideways ranges. Since the overnight session, the market very, very confined. Pretty much pinched here now between the median line and the primary support. Crude oil also very quiet, trapped between primary resistance and the next resistance zone. This would be an interesting area to bracket. You know, a lot of times we only look at bracket type trades on the inventory report, but you know, you've got a pronounced range here. You could use your OCO function, bracket that. I don't know if I'd enter right at 47.50. Maybe I'll give it another tick. And I don't expect the market to bolt. Maybe, yeah, I'll figure a stop strategy after it fills. But there's a possibility, and you could do the same thing with the soybean market also. You could bracket that range that you're seeing in soybeans. All right, the NASDAQ's still a little bit of a mess. Here come the buyers again. No, Jim, oil inventory tomorrow. Yeah, you're welcome, Tony. Tony says, thanks for the bean trade yesterday. It was a good one. It's nice when they work out. I'm having a little bit more success with my day trades this month than with my position trades. But that's how it goes sometimes. Okay, here we go. Another run toward the 47.90 area. Now the Falcon getting ready to produce a late filter entry signal. Now here's an instance again where the trend line is out of sync for a single bar. It's a little bit more, well, shall we say, sophisticated late filter entry signal. Now notice the filter is not in sync yet, but I knew that if this bar closed on the low, it would flip the filter over. I just know that from experience. That's what it does. We also got slipped a couple ticks on the entry there. And now we're back down on the primary support. So we need to see the market take out that primary support area. It gives us an opportunity for a second push entry here on the Raptor, which appears to maybe have made a test of the extreme. Still, you know, a lot of hit and miss kind of stuff here this morning because we don't really have a clear indication yet which way the market may want to go. Keeps trying to go lower and then rejects and heads higher. So we're getting a rather tight little range here developing within the larger range. So we had that big range that we were considering, and now it looks like we're getting a tiny little range developing as well. The hawk, look at that, just a mess. All the yellow bars. There is a green bar sell, so if you did consider this to be the trading range, you could try to short here. Typically, though, ranges that are this tight are really difficult to trade, and I certainly wouldn't trade 7 contracts on that. Maybe if you wanted to try it, you could go in with a single, perhaps cover it up there. You know, it's again not what I would consider to be a high probability setup. We got enough going on here with our Falcon trade. The advanced decline numbers spiking in favor of the buyers. 1650 on the buy, 1040 on the sell. So we've got almost a positive, or yeah, I guess a positive 600. Right now, I'm kind of looking for something resembling a test to the extreme to confirm that the sellers are going to try to short the market, and then I can start to get more aggressive with my stop. Maybe even a double top. I wouldn't like to see that because obviously if the market slips the stop by a tick or two, that might be enough to stop me out. All right, we'll put that back on the shelf for now. And I can cancel. Oops, that's dangerous. Hit the wrong button there. Yeah, Jim says, this is a mess. The NQ, the YM, crude oil, yeah, they're all lost. Soybeans, the only ones who have come around, and I apologize, I was concentrating on my NASDAQ trade. Nice little first micro-macro cross there on the soybean market. Comparable signals on the Eagle and the Falcon and the Raptor, but nice little decline there. Tony's asking, considering all four birds, is the first micro-macro cross still the highest probability trade? That's a good question. Certainly, it's one of the highest probability signals with the hawk, but across the board, is it the highest probability? Yeah, I think I would say yes. You know, each of the tools has their high probability signals. With the Falcon, of course, we've got the trend change signal. That's a very high probability signal. Here's one to the short side. Here's one to the long side. The Eagle, we've got our red bar buy signals. And the inverse would be the green bar sell. Those are very high probability also. But yeah, if you forced me to take only one signal out of all the tools, and this is my personal preference, but yes, I think I would lean toward the first micro-macro cross signal. If I could trade only one signal and I was trying to make a living doing it, I think that would be the one. Kind of goes to your personality as well. I think the first micro macro cross and just the whole scalp thing goes well with my personality. I don't mind if the market goes on without me. Here's a first micro macro cross. I don't mind if I set up the trade like this, I scalp out and the market goes further without me. I'm okay with that. Other people are not. Come on, just get below 47.90 again. Doggone it. 47.90, a huge number for this market right now. You can see why. I guess maybe a little bit higher here, 91 or 89, sorry. There's definitely a certain amount of bullishness to the market, which I'm not enthralled with. And Jim says the DAX is very strong and the bank index not giving it up. So last chance now for the sellers to put the nix on this. I think I'll give them just a little bit further here. We'll give them 48.01. Still skewered by the median line here on our support and resistance sweep. Come on. They really couldn't be any more neutral. All right, so seeing the sellers come back into the market here, I think it's probably safe to start rolling our stops. Our crude oil trade that we were considering is also engaged, where we were bracketing this range. So we may want to consider putting a stop in play here also. And once we get a breakout from one of these zones, a lot of times we'll see the market move two zones. So maybe I'll set a profit target down here somewhere, not looking to be overly greedy. We'll put that back on the shelf. Or of course you can just trail a stop also. So that took a fair amount of work, but we got a little bit of a follow through finally. Or with the crude oil trade, there's likely to be some or reaction here around the 47.05 mark. So you could even just bring this in a little bit. Still a lot of money, about $200 on the table there. You could set your profit target. Let's see how things look for a range type perspective. So there's, oh yeah, see, so we've pretty much moved the single range, and yeah, that would be 2. So if you were looking for a 2-to-1 reward to risk, well, that's where your stop would be down there. Here, I was going to go for, try to get 200 out of this trade. There we go. Soybeans, my goodness. Here's soybeans on the Eagle. Just a great trending market. Just a typical hard edge bounce during the wee hours, confirmed off of the North American Open. I typically run a much more aggressive profit target for soybeans Because once they start to trend, $500 seems to be a typical daily range for them. And you can get that kind of information also from the Day Ranger, that handy dandy little add-on tool. So here's the Day Ranger on soybeans, and you can see that the range has been going from around 70, your 30-day average of 70 ticks, 10-day average 60 ticks, 5-day average around 63, 64 ticks. Excuse me. Yesterday's range 47, or pardon me, yesterday's range 41, today's range 47. So you can see that most of that range will occur during the North American session as well. Sometimes soybeans will make a pronounced move during the overnight, but by and large, it is a North American market. I was just going to point out this first micro-macro cross that triggered. The eagle, a little bit more difficult to trade because we've got, again, a possible trading range, right? We're not outside of this trading range yet. So if the market is range bound, and it's too early to tell at this point, typically what we want is we want the market to break out, retest, and then short it. And the opposite would be true to the an upside breakout. Stop it.
Order canceled.
All right, crude oil prices continued lower, hit my profit target, my $200 target. Hooray! Hooray! Look at all the volume on that bar. That was hovering around the median line. So zone number 2 would bring it down here at the primary support, and it looks as though we are going to get that. There you go, zone 2, hooray. So when you break these support and resistance areas, very often the market will move to zones. So zone 1, zone 2, and you're going to see a little bit more support come in here now, I think, around the primary support, because a lot of traders will be looking at the same thing. They're going to be looking at, oh, all right, well, I need a 2-to-1 to make my swing trade worthwhile. This is how they're thinking. And so they'll start to exit now or scale out. You know, if they're trading multiple contracts, they'll take profit on some and try to hold the rest for a little bit more. I know that's what I would do. Definitely a seller's market now. And it looks like that, now that we've gotten the breakout, pardon me, we can anticipate a little bit of a retest. Come on, retest. Well, crude oil still slipping lower, and soybeans. My goodness. Here's soybeans now on the Falcon. What a terrific move in the soybean market. I do believe they have hit their eagle target as well. So a four-figure day here in soybeans if you took the eagle, the falcon, and the hawk signals, or just traded a multiple contract. So here we are. We're just waiting for our next opportunity. A lot of waiting this morning. We did get a couple decent opportunities, so we don't want to press our luck. Still waiting. Everything seems to have dried up. Here they come. Getting a little bit of a bounce. Some buyers trying to buy in a little bit, but all right, here we got something resembling a macro pullback. It's getting there. I know I let this macro pullback slide past me here. I was watching crude oil. Okay, I was just about to point out this signal that we have here on the Falcon and the Raptor. And what we could do is we could actually take this on a second push if you wanted. So all that means is we allow the signal to engage. If we anticipate some sort of reaction, we can let the market give us that reaction, and then we can look to get in on some renewed momentum. And we'll just get a signal or a stop in play here. And now we're down to break even. So we've hit our first profit objective, even though I was a little bit late getting in on the signal. And crude oil falling hard, which is a little bit of a surprise given crude inventory is tomorrow. Yeah, Tony said there may be some old sell orders at 47.74 from longer time frame traders from several days ago. I think that's a pretty accurate assessment, Tony. It looks like we may have seen some of them ditch. And now the market's trying to find some support again. No, don't retrace. Don't retrace. Oh well. We still hit our first profit objective, so nothing wrong with that. Just kind of picking and choosing our trades here this morning, and I think it's advisable to, take your profit when you have it. The buyers are going to show up here somewhere. I don't know if they're going to be able to get the market into a full-on retrace, or whether we're just going to see prices continue to drift a little bit sideways. That's would be my guess. Dan, yeah, Daniel's asking, isn't that a good sell signal on the hawk? Um, yes, it is a macro pullback signal. We do have a little bit of structure here. I would look to scalp out. The market is definitely in a downtrend today. So even on upticks, the market's going to be looking for a chance to sell. Yeah, sorry, I really do need just to focus on one market. I've been looking here at a couple other markets that are in runaway mode, and I did miss that macro pullback signal. No, you're absolutely correct, Daniel. Way to go, Tony. Tony says he punched in a sell market order at 47.73 and out at 47.69. Yeah, today is that kind of day where we're getting some very good follow through, which is nice for a change. Given what we have been seeing, there's been a lot of choppiness, not a lot of follow through. The thing with this macro pullback signal that we were looking at here is you're going to need to cover it a little bit deeper, right? Because there is a possibility the market's going to try to retrace here. That's what I'm thinking at this point. As we've had this kind of move lower, might see a little bit of a retrace before the next leg down. So the challenge with that trade will be like the one we took earlier this morning, not getting stuck in a or not getting tagged before the market continues. Tony says the mid cap has also been a good market with macro pullbacks. When the market is trending, they all work well. Here's another macro pullback signal. This one you could draw a little bit of a trend line on. And you could be looking to short, say, below the trend line just a little bit, offer up. Your signal is going to print right here, 47.72.5. You could offer up a couple of ticks, enter a little bit later. But overall, a pretty good market across the board. While crude oil is still slipping lower. Our macro pullback signal now here moving into yellow bars. Maybe this will develop into a 4-arrow consolidation. All right, so I'm waiting for a 4-arrow consolidation here. Possible trend change signal here in the Falcon. I wouldn't get too excited about it because the market pretty much out of the open, well, except for that first little rally. We do have a little more of a downtrending market here today. All right, let's see now. We've got a couple signals here on our possible four arrow consolidation. Now, again, it isn't unusual to expect a little bit of a rally out of here. As we get closer toward the hard edge on both the Eagle and the Raptor, we can probably anticipate another move lower. The challenge here will be, to get some momentum. And we've got 1, 2, 3 signals here on the Hawk. 1, 2, 3, waiting for signal number 4 to print. The 4 arrow consolidation is the only signal I will take off of a yellow bar on the Hawk.
Order pending.
All right, so there's our fourth signal. Sorry. I'm going to turn off my other charts here in a moment. So there was the 4 arrow consolidation. Here is the macro pullback from earlier. So if you had your stops up here, probably a good idea to bring your stops down a little bit now. As we're looking for the market to retest this area. Okay, still nursing this trade a little bit lower. Come on down. Well, they're plodding away here. We can anticipate that the market's going to try to get back down here, retest the lows before we get a rally, and or just a sideways session. I don't anticipate a full-blown rally, but a move back, say, to the 47.80-ish area, entirely possible. Yeah, that's pretty much it for this morning. The market's really slowed a lot. Well, we'll do it again tomorrow morning. Don't forget, Wednesday we're meeting at the open house venue, at the public venue. If you don't have the address for that, you can email Adam. And we'll see you guys again tomorrow morning. Yeah, I do anticipate the market will drift a little bit lower here. It's sure taking its time, though. You may have to hang with it for a while. All right, ladies and gents, we'll talk to you tomorrow morning. Bye for now.